Okay, sorry guys, we had network issues there. So we're just going to continue from where we stopped. So we're looking at margin, trying to do revision on margin and leverage. So margin is calculated by multiplying the units of the trade, multiplied by the exchange rate, right? And then we say that, let's say you are looking at euro US dollar, a currency pair, and let's say the current exchange rate is 1.1755. So let's now say you want to buy one lot of Euro USD, or let's say, let's even say 0.1 lot. That's what you want to buy. How does the market calculate the margin? The margin is going to be 0.1 multiplied by, this 0.1 lot. One lot is 100,000 units. All right. So that's 0.1 lot is 10,000 units. So multiply by 1.1755. And so that's going to be 11755 dollars. I think so. Yeah. So that's 11,000. That's how much you will need to deposit. Okay. So that means the broker is going to freeze that from your account before you can open that trade. You can say 11,000 is really, really very big. Okay. So that's why the brokers and the brokers now introduce leverage. So that means they can give you a leverage that can allow you to take this big trade with very, very small money. So leverages are in percentages or they're in ratio. So if you choose 1 to 1 or 200 leverage, for example, this margin is going to be reduced divided by 200. All right. So at the end, what you're going to have is going to be like maybe $587.5. So can you see how leverage is able to beat down what your margin is supposed to be? So this is now going to be the margin, okay, for this trade. All right. So we talked about that. And so another thing we talked about was the margin used and the margin unused. We said as you open more trades, your margin, okay, let's look at margin. Your margin unused or free margin, your free margin is going to be equal to your balance, okay, minus your used margin. Okay, used margin are the margin that you're currently using to, for the trades that are currently ongoing. So let's say your balance is $500, and let's say you open 3 trades that are currently ongoing, and each of them is on the margin. So if the margin of the first one is $50, and the margin of the second one is $30, and the margin of the third one is $20, your total used margin is going to be $100. Okay. So that means your margin, the margin that you now have free, will be what? Will be $400. So anytime you want to now open a new trade, you must make sure that the trade is not bigger than this $400. So the market is not going to look at your balance. Rather, it's going to look at the margin that you still have left, okay, to consider whether you can open a particular position or not, okay? So that's the issue with margin and margin unused, margin, free margin and all that. Please check the YouTube for yesterday's class, okay, to get more detail about that. And so we now say that we talked about margin call, because as you continue to open more trades, okay, if your trades are in profit, the margin can be systematically be freed, okay? It can be freed. That means your margin, your free margin can increase if your trades are in profit. But for those who used to be aggressive, if you continue to pile up losing trades, it's going to get to a point that your free margin is going to get used up. And so when you get to a particular level, you are going to get a warning that the margin that you currently have, your free margin, is getting so used up and you might not be able to open fresh trades. Okay, so you can either close the ones that you have ongoing or you fund more. That's what it means. That's what we call margin call. It's like a warning. But when the aggressive trader does not yield to the warning and continue to pile up and things don't go well for him, then there's going to be a stop out, which means that the broker will have to forcefully close some of your trades or all of them so that you will not be able to exceed, what your money can cater for. Okay. So, um, so that's it, guys. That's just a brief explanation, a brief explanation. And we also talk about the difference between balance and equity. Okay. And we talked about realized profit, realized losses. So we said there was that if you have a trade, if you have your balance, let's say your balance is $500. Okay, your balance is not going to change until you open and close a trade. When you open a trade and you close it, your balance is going to change. If the trade is in profit, your balance is going to increase. If the trade you close is a loss, your balance is going to decrease. Okay, so that's it. So the closed trades are what we call realized profit or realized loss. If it's a profit, we call it realized profit. And if it's a loss, we call it realized loss, right? But if those trades are not yet closed and they are floating, okay, they are still currently ongoing, we call them floating trades. If it's profit, we call it floating profit. It is loss, we call it floating loss. Okay, so while the balance doesn't change, when you have trades that are ongoing, your equity is going to change because your equity is equal to your balance plus your floating profit. If your profit is, if you have floating profit, but if you have floating loss, it's going to be your balance minus your floating losses. So that's what is going to make up your equity. Okay, so these are the things that we want to show ourselves now we're going to look at some examples on the MetaTrader 4. Okay, so let me take us to MetaTrader 4 now, and then we're going to verify all those things that we just talked about. Okay. Okay, so this is the MetaTrader 4 now. Let me bring it here. So I hope we can all see my MetaTrader 4. So let's do a bit of revision on this MetaTrader 4 again. We said on the MetaTrader 4, this is where you trade. Here is what we call the market watch. This is where you have all the different instruments you can trade. So once you log into your MetaTrader 4, what you need to do to make sure that all the instruments are showing is to right click on the MetaTrader 4 and then click show all. It's going to show all the instruments you want to trade. So if there's any instrument you want to trade, instead of you to look for it, just click here and type the instrument. Let's say I want to trade Euro US dollar. I will just type EURUSD and you can see it's going to bring it out for me. You see it, it's going to highlight it. So let's say I want to launch it here. I will now right click and then click on chart window. And then it's going to bring it here for me. So this is the Euro US dollar and the price is currently 1.05881. So let's come here. So let's come in and now this is what we called, of course, I already told us how we can log into our account by clicking the connection status here and click on login. And then you can now put the details here. Talked about that yesterday, and you can switch from one account to the other if you have many accounts that you have under your in your navigator. That's called navigator. The other important thing you need to know is the trading terminal here. This is where you have information about your trades. Okay, let's say I right click on this now. So this is where you have your trades. Okay, sorry, I double click. If you want a basic information, this is where you are. You can, let me double click back. This one, you only show your balance and all those things. Okay, if you double click on it, you're going to get more account history and all those. So let's collapse it. I double click again. And so this is showing a balance of 522 for 5,224 profit loss equity margin. Can you see? Now, the free margin is the same thing as the equity and it's the same thing as the balance. What is the reason? Who can tell me why that is so? Who can tell me why our balance, our equity, and our free margin at this current time is, why they are all the same? Why? Can tell me? Can someone tell me quickly? Quickly. I'm yet to get any answer. Okay, so thank you, Mimi. Mimi says there are no open trade. Mary says there are no open trade. That's good. That's correct. It's because there are no open trades. That's why. Immediately I open a trade now, my equity is going to change based on my floating trades, and my free margin is going to be reduced as well because I have margin on a trade. So let's say I want to trade, I want to open a trade on Euro US dollar. I want to open 0.5 lot of Euro US dollar. So I want to open okay, let's do 0.05 lot of Euro US dollar. So let's see what the margin is going to be, but we're going to have a rough estimation first so that you know that the calculation is correct. Okay. Let me do this in such a way that you'll be able to see my calculator. Okay, a moment. Okay, can you guys see my, okay, let me bring it here. Okay, I mean just this. I want us to, so that we can also see my calculator and we can see everything in one place. Okay, so that's it. Okay, let me. So I can then bring up my calculator like this if we need it. Okay, let's say I just bring the calculator here. So let's say I want to open 0.1 lots, 0.5 lots. All right, 0.5 lots of 0.05 rather, 0.05 lot of Euro US dollar. So remember what we said we are going to need. We're going to need some information. Okay. Let me remove this. Okay, cool. Oh, perfect. So we're going to need some information. The first thing we're going to need is the size of the trade. Okay, somebody's asking, that's Mary, says, is 0.05 lot not the same as opening 0.1 lot in 5 places? Yes, yes, Mary. 0.05 is the same thing as 0.01 in 5 places, of course. Okay, so let's say 0.05. So the margin, let's calculate the margin that is required for this trade. That's going to 0.05 multiplied by 100, okay, 100,000. All right, multiplied by 1.0587. What I don't know exactly is the leverage I'm using on this account. I don't know exactly the leverage. So that's going to be divided by the leverage. Okay. Which is going to be roughly, do the calculation here. That's 0.05 times 10,000, 100,000 rather, and then multiply by 1.05871. You know, it's actually changing, so you might not get the exact figure. Okay, or let me change it to what we have now. We can get something 0.58, let's just say 7. Then what's divided by 200. I don't really know exactly the leverage I'm using. So if the leverage I'm using on this account is 200, then my margin is going to be roughly 26. So let's place the trade. Now, for you to place a trade, this is where you come to. You come to new order here, or you right click and go to trading and then go to new order. All right. So, but this one is much better, easier. new order, and this is what's going to show. Let me close it. New order, and then this box is going to come up. It's going to ask me what do I want to trade? It's euro US dollar. If I have euro US dollar here, it's euro US dollar is going to bring. But always make sure you check it that's what you want to trade. Otherwise, click and look for what you want to trade here. And then it's asking me for volume. That's the lot size. I put 0.05 lot size there. And it's asking me for all this. We're going to talk about this ones later. What we want to check now is just a margin. So you look down here. What we currently have as margin, we currently have as our margin, as our free margin is 5224.08, which is the same thing we have for all of this, everything here. Okay. So let's say you want to buy, for example, we're just doing this at random. Okay, margin is 10.59. Actually, that means my leverage is actually more than 200. That's what it means. I know I told that, can't really remember what margin that account is on. So my margin should be maybe like maybe 500. Should be like 500. You can get up to like 500 leverage from GWX Exchange. So using higher margin is going to allow you to open more trades. So the current price is, let's say, 1.0591, then divided by 500. Okay, so that's it. It's just around that 10.59, 10.59. So this account is on 500 leverage. So can you see if it's on 200 leverage, I'm going to be, more money is going to be frozen from my account as margin. Okay, so the higher the leverage, the less you're going to pay in margin. Okay, so but it's good to use a very reasonable margin. So that's it. So you can see the margin is this, and you can see my free margin has now reduced from 5254 to 5212. You see that? Okay, so that's it. If I open another one, let's say I open another one, this is going to be like, it might not be 10.59 exactly, but it should be around there because price is still around where I opened this one. So if I also buy this one, the margin is going to increase to, I think, maybe 20 something. You see that? The margin is increasing, and then my free margin is reducing, and it's going to show me my margin level. Okay, so this margin level, once you are getting to like 100%, the margin level now is 24,000, which means this is a very, very healthy account. I mean, based on the trades I've placed so far. But once your margin is getting to around that 100%, you'll be notified. You'll be given a margin call. Okay, so the more, let's try to open a sell trade. If it's going to counter, and you see now when you open a sell trade, the market, it's like you are edging. That's what we call edging. Like when you open a sell trade, you can see how my margin reduced on the same instrument. Okay, if I open another sell trade, my margin is gone. Why is my margin gone? My margin is gone because there is no way the market moves now that I'm not going to make any profit, and I'm not going to make any loss. So I'm opening two trades, 0.05 trades, two buy trade and two sell trade. You will see that there is no way my profit is, I'm going to lose or gain that much from this trade. Okay, I have 4 trades, 2 are going up, 2 are coming down, and they're of the same size. So the profit, that if the price goes up, the buy profit, we're going to cancel the sell losses. Okay, so that's why I have free margin, because this is almost like I'm not trading. Okay, I don't know if you guys understand what I'm talking about. It looks like it actually means that like I'm not trading. Okay, so but let me try to now close. Let's close. You can close. How do you close a trade? Just come here. You're going to see that up and down arrow. Then right click and click close. Right click and click close. All right. And then right click and click close. So that's, you can see the margin is freed again. Okay. So that's it. So once you trade easily, you don't over leverage your account, your margin level is going to be healthy. Okay, but when you are over leveraging your account, like me, instead of opening 0.05, let's say I'm now putting 5 lots. Okay, 5 lots is going to require like maybe 200. It's going to require maybe like 500, because 0.05 lot is like I think $10 or so, right? 0.05 is like $10. So if I do 5 lots, that's going to be like $1,000 as margin. Okay, that's like 20% of my account is gone for just one trade as margin. Okay, so so that's how margin works. So that when you see all those things, you understand what they are. Okay, so let's move away from here. Okay, so the next thing we want to do now is let's try to let's go back to the slide, and then we're still going to come back here. Okay, we're still going to come back here, but let's look at the slide and complete the last thing that we have there. Okay, we'll now come back here to finish off. Okay, so let's go back now. What we'll be switching between the slide and what we have here. Okay, so let me get this down. Okay, so let's go back to the slide quickly. Quickly now. Okay, so we're going to look at pips now. We said, like, it was on Tuesday, we said that we did a little bit of explanation, okay, about pip. We said pip is the unit of price measurement. Everything that you have has a way humans measure their progress or their decrements. Okay, whether it's height or weight or time, we have a way that will measure them. We have an SI unit, a standard way of identifying or measuring the size of those quantities. Okay, so in the forex market, in the for the forex exchange rates, which is what we trade. We trade exchange rate in the forex market. The way we measure price movement is in pips. Okay, it's in pips. When you check, we go back here now, you're going to see the euro US dollar. This is the euro US dollar chart, and you can see the price against time. Okay, so that's what the chart is doing. The chart is moving with time. The price is changing. The current price is this, and you see that it's gonna move. Okay, it's not going to stay here forever. It's always moving. Okay, there was a time today, it was around here, around 1.0471. Now it has moved to 1.0594. So that means the people that bought euro US dollar today, they will be making money now. Okay, but we need to, for us to know how much you're making or how much we're losing, we need to be able to know, be able to calculate how far the price has moved from where we enter to where the price currently is, and the value of those movements. Okay, and then one thing you will see here, we said that the currency pairs, they are in 5 decimal places. Okay, currency pairs are in 5 decimal places. The ones that are in 3 decimal places are currency pairs that end with JPY. We said that, right? Who can still remember? If you can still remember, please drop a message. Let me know if you can still remember. We talked about that on Tuesday. The currency pairs like Aussie CAD, Aussie CHF, you can see them in 5 decimal places. Why those ones in JPY? They are in 3 decimal places. Okay, because the JPY currency was so much devalued by the Bank of Japan many years back. So it's in 3 decimal places. Okay, now the PEEP movement starts from the 4th decimal place. The PEEP movement starts from the 4th decimal place. So let's just pick a price. Currently, Euro US dollar is 1.0596. Let's just pick 2. This is in 5 decimal places. Now the Pip counting start from here. Start from the 4th one to this place. Now, just like 100 tens unit and all that. So when the price is moving in unit, this is the unit part. It's moving from 5 pips, 6 pips, and all that. So this one is in unit. This is like 6 pips. Whatever number you have here is in unit. Whatever number you have is in tens. This is 96. This is 596 pips. Okay, there's nothing here. It's still 596 pips. And from here is what? 10,596 pips. Okay, 10,596 pips. So if you look at another one, 1.21572. The pip movement start from here. This is 7 pip. This is 57 pips. This is 157 pips. 2,157 pips, and then 12,157 pips. So that's the way it's been measured. So let's say at the time price was here, 21576, and later it now moved to 1.21332. How do you calculate the pip movement? You just subtract one from the other. All right. So you just do the normal calculation. So if I bring up my calculator, although you don't really need to do it like this, I'm going to show you a simple way of measuring that. So this is our calculator here. And so we can do 1.21516 minus 1.21332. That is 0.003 something. I don't know if what I did there is right. Okay, I don't think it's right. 1.21516 minus 1.21332. Okay, so what do we have there? We have 0.0018. So where's the pip coming from? The pip is starting from here. This is 18 pips. Is now, this one is not up to 1 pip. This one here is not up to 1 pip. It's what we call pipette. This is 2 pipette, like 0.2 pip. It's not up to 1 pip. So the pip counting starts from here. So if you want to know how many pip here now, what is this? That's 18 pips. Okay, that's 18 pips. If let's say when you did this subtraction, if what you have is 0.01725, what's the number of pips here? You just take this one away. This one is not up to a pip. So you then look at this. That's 172.5 pips. It's as simple as that. Do you get that? Okay, very, very simple. Okay, another way, a very easy way, another easy way you can do is once you do the subtraction, multiply by 10,000, it will give you the exact number of pips. Okay, let's say for this example that we did here, this particular example, instead of me to just look at it like 18.4, I can just multiply by 10,000. So I get 18.4 straight away. All right. Okay, that's 18.4 pips straight away. And this other example here, 0.0172.5. It's very easy to say this one's on 2.5, but if you still want to confirm, just multiply by 10,000. That's 172.5 pips. So that's how you can calculate the number of pips between one level and the other. Okay. Now, all the examples that we gave here so far, they are only for those currency pairs that have 5 decimal points. But those currency pairs, those Japanese yen currency pairs that have 3 decimal points, they are quite different. Okay. So those ones that have 3 decimal points. So let's look at an example. Let's say US dollar, Japanese yen. Let's say it's currently at, let me see where I come from. Okay, let me just look for it. USD JPY. Okay, this is USD JPY here, 127.64. That is the current price. All right. 127.64 is the current price. 127 points. Okay, 648. Let's say 648. Okay, just like we have for that now, the pip count start from here. This one is not up to a pip. That's 8 pipettes, like 0.8 pips. So the pip movement start from here. This is 4 pips, 64 pips, 764 pips, 2,764 pips, and 12,764 pips. Okay. And if we want to do the, if we want to just, if this is going to confuse you, okay, let's say we are looking at price between 127.648 and 125.222. I want to find the number of pips. It's easy. You can subtract. If you subtract, you get 125.222. Sorry. 127.648 minus 125.222. So that's 2.426. Okay, that's 2.426, 2.426. How many pips do we have here? You leave, this is not up to a pip, this is pipette. So you have 242 pips and 6 pipettes. That's 242.6 pips. Simple. But if you want to, this one confuses you, you can just multiply not by 10,000 now, you multiply by just 100. Okay, for currency pairs that end with JPY, you only, when you find the difference between one price level and the other, for you to know the number of pips between them, once you find the difference, which is one minus the other, just multiply by 100. So that's 2.426 multiplied by 100. And so that's what we have there. Okay, that's how you can know the number of pips between one price level and the other. Okay, but is it every time we have to be going through all this? Let's find a way we can do it on the MetaTrader 4. That is a tool that we can use for that. We can just pick a tool here and drag it to know the number of pips. Very simple. Okay, somebody says, why are we multiplying by 100? Okay, I don't want to take you through all those mathematics actually, but the major reason is in 3 decimal places. Okay, let's say it's 27.55 is the price for JPY. Okay, 2. This is where the pip movement starts from. This is where you have the decimal point here. Everything here, 1, then the 2 zeros multiplied by 100. Okay, it's just a mathematical extrapolation and all that. And the ones of 5 decimal place, let's say 2, 4, 4, 4, 5. This one is not among, it's in pipettes. And then this is going to be 1. Then how many do we have here? 1, 2, 3, 4. All of them is going to be 0. 1, 2, 3, 4. That's 10,000. Okay. Okay, those ones are just mathematics stuff. All right. So let's look at how do we do this on the MetaTrader 4 without us doing calculation. Okay. Now, let's say, let me use some drawing tools here. We have on the MetaTrader 4, we have this toolbar here where we can pick. This one is, this one here is, if I want to draw an horizontal line, I can pick it. And then anywhere on the price, I can drop it. Can you see it to draw it here? I can pick another one and put it here. Okay, we have vertical and all the other ones. So I want to use this horizontal to pick 2 points, just to stick them there. Okay, that's what I want to use this one for. But let me change this from red to yellow. Yellow is a bright color and it works better on dark background. Let me also use yellow here. Okay, then I double click to make it stick there. So let's say I want to look at the number of pips between 1.0461 and 1.060, the other one. By using my calculator, I can easily just do 6064 minus 1.0. If I'm a fan of calculator, it's quite very easy, very straightforward. And multiply by what, 10,000, because it's in 5 decimal places. So that's 142.3 pips. But instead of me to do this, I can easily pick a tool here. It is called a crosshair. This tool here that looks like cross. I'll just pick it. Now, this tool does not go sticky like this one and this one. Once you click, it will disappear. All right. It's not as sticky. This one, horizontal line, vertical, and all that. Once you click them and you drop, they get sticky till you remove them. But this one doesn't get sticky. You have to just pick it and come to the first level, put it there, don't click, then click and hold. Can you see? Click and hold and then drag to the second level. Now, this crosshair gives 3 information. The first one, you're going to see 7 there. The second one, you're going to see 1428. The other one, you see 1 point something. The first one is to tell you the number of candles or the number of bars between the first level and the second level, as you just the way you drag it. But that's not what we want to do. The second one is the number of pips in 1 decimal place. Remember, the last one is not up to 1 pip. So what we have there is 1,428, but the last one is not up to 1 pip. So that's 142.8 pips. Okay, 142.8 pips, which is just like what we have here as well. Okay, but this one is 142.3. The reason is that it's very hard, okay, for me to achieve here, for me to place this exactly at the price level. It's not really going to be, you may not really get it so perfect like that. Okay, it may just be a little bit, maybe 2 or 3 pipettes away from there. Okay, it's not even on it properly. So there's gonna be that slight difference, unless you are just you're really a perfect person who can do that. Okay, unless there's gonna be a slight difference. So that's why you also learn the calculation. That one is perfect. It gives you the right answer. But this one is just to give you, the difference might just be in pipettes. It won't really be that much. Let me try it. Okay, let me try it again. Let me place it from here. Okay, I'm able to pick that one. You can see how the white is settling on the yellow properly. And then I bring it here. This one is more, okay, that's 142.4. 142.4. But that's just like 142. Okay, you're going to see the difference in pipettes because of the error in the placement and all that. So that's just 142 pips. Okay, let's say we are looking at this level and this one. You use a calculator, find the difference, multiply by 10,000. Or you come here, you pick here and drag it here. That's what 173.4 pips between them. Can you see? This is quite easy, simple. Everything you're going to be doing, you're not going to need more calculation here. Okay, you're not going to need calculation, but it's just very good for you to know how those things are being calculated. All right, so that in case you also want to teach somebody, so that at least the person will know that you know all those things very well. You understand? So I could have just taught you how to just pick this. Okay, so and if it's also, let's bring US dollar Japanese yen here. I'll right click and chart window. And then this is US dollar Japanese yen. So let's look at the number of pips. It's still the same thing. You put this one here, and let's say we're looking at these 2 levels. I want to calculate the number of pips between these 2 levels. So you just click here, come to the first one. It's not there. Come to the first one. You can see it's not going to be that easy, but at least it's going to give you a rough estimate. That's about 219 pips. 219 pips, 219 point something. So all you can do this minus this multiplied by 100. Okay, do you guys understand that now? Somebody says at this point, I think the main thing is no direction of, no, that's not what we are doing now. We're not looking at direction of the market now. We're just looking at the basics, how you can know the number of pips, okay, between one level and the other. So we're not looking at when we get to analysis, we're going to talk about direction and all that. Okay, so that's it about pips. Okay, now the question now you're going to ask me is, what is the value of this pip? If I say 20 pips, 30 pips, 40 pips, what is the value of this pip in dollar? What is the value of this pip in dollar? And how are we going to be able to know how much we'll make and how much we'll lose if it doesn't go in our favor when we place a trade? Like sometimes somebody can say, okay, I make 20 pips today. You might make 20 pips on Euro US dollar. Another person can also make 20 pips on Euro US dollar. We're going to discover that 20 pips does not mean the same thing. It may mean bigger return in terms of dollar value than the other person, for one person than the other person. Okay, because there are some factors, okay, that it's not just number of pips. So you can't just say I make 20 pips, 10 pips, and all that. That's not the only thing. We need to also know the number of pips. What is going to determine how much you win or how much you lose are three things: the number of pips that you make or lose, whatever the case may be, then multiply by the volume of your trade. All right. Okay, because if you make 20 pips and I make 20 pips, if you use one lot and I use 0.1 lot, you're going to make more money than me, right? So if that means if I make $20, you are going to make $200 because your volume is like times 10 of my own. So that's why volume is also very important when you are calculating your P&L, profit or loss. So this one is the pips that you make or you lose. Multiply that by the volume of your trade. Then one other thing, the value of one pip of the currency pair you are trading. See, every currency pair has its own pip value, right? Every currency pair has its own pip value. Like for example, the Euro US dollar, the value of one pip of Euro US dollar is $10. Okay, it's $10. Of GBP US dollar is also $10. Of Australian dollar US dollar, New Zealand US dollar, they are all $10. But other ones are not $10. Other ones are different. All those currency pairs that end with US dollar, they have the same pip value, which is $10. Okay, and that's what a majority of traders, that's all what they used to hold on to, because that's what they were taught. Okay, that one pip is $10. Okay, but it's not the same for all the currency pair. But let's assume that we're using $10, okay, for one pip. So that means if I trade Euro US dollar, and let's say I make 15 pips, and then let's say I use 0.1 lot, and then they multiply by $10, which is the pip value. So that's going to be what? I'm going to make $15. So that's how the profits are being calculated. And let's say I lose 10 pips. 10 pips. How will my loss be calculated? This is profit. How will my loss be calculated? It's going to be the number of pips that I lost, which is 10, then multiply by the volume of my trade. The volume of my trade, let's say 0.1 or so, and then multiply by the pip value, which is $10. And that's going to be $10 loss. So that's how it's being calculated. Okay. So let me clean off all this. So that means every time you want to trade, it's important, you know, how much pips you are intending to make, how much pip you are intending to risk, then know what size of your trade is going to be, and then also understand the pip value. So that means every pip you make, understand the value of one pip of every currency pair, the currency pair you are trading. So that's what is going to determine your profit or your loss. So now, what determines whether you're going to make money? It depends on getting the direction of the market right. So if I buy US dollar Japanese yen here, this is the current price of US dollar Japanese yen, 127.6. Let's say this is where I buy it. Now, if I buy, so that means if price goes above here, I'll be making money. So that means if price goes above my entry price, I'll be making money because the direction of my speculation is right. And this is the price I'm buying. So it's going to be, my profit or loss is going to be relative to where I entered. I might be making money if I buy here, but if another person, okay, let's say I buy here, and let's say Larry bought here. I don't know if Larry is on the call. Let's say I don't know, let me check it. Okay, Larry is there. Okay. So let's say Larry also bought here and I bought here. And so price started moving up and then started moving up. Let's say it gets here. If it's here, I will be making money, but Larry will be losing money. The reason is price is above my own entry. I'm buying. Meanwhile, for Larry, price is below his entry. So it's going to be losing. And how much am I going to be making? I have to know the number of pips first, which is the difference between the level I entered and the level the price currently is. Okay. And how much you're also going to know how much this person is losing. It's about the distance between here and here, where this is where the current the price is. If you want to measure that, so let's say this is where the price is. Let's say this is where the price is. Let me use this dotted stuff. Okay, let's say this is where the price is. And let's say I bought here. I will be making like roughly 65 pips. Okay, because that's where I bought 65 pips. Summy is making 65 pips because I bought here and price is above. But let's say Larry bought, when he bought here, price went down. So for Larry, me, I'm on plus 65 pips. For Larry, his own is going to be what? You're also going to find a different distance between here and here, which is like, is losing like 61 pips, minus 61 pips. So if you want to calculate our floating profit and loss, it's very important that we know, I believe that we all know that it's not just about the number of pips that will determine that. Okay. So the value of each of this pip for me is about $650. And for Larry is about $610. Okay, let me not go that way. Let's just use the calculation straight away. So if we want to calculate now, let's say Summy represented with X, I'm gaining 65 pips. The next thing is what the volume of trade. Was the volume of my trade? Let's say I'm using 0.1 lots, then multiply by the $10, which is the value of 1 pip of euro dollar. And so if you multiply this, I'm going to be making $65. That's how the calculation is done. And for Larry, he's going to be losing 61 pips. Then let's say you also use 0.1 as a lot and multiply by 10. That's going to be minus $61. So you see, guys, that is how profits and losses are calculated by the market. Okay. Okay. So we talked about $10. We said something that it's not every currency pair that has $10 as the pip value. Okay. There are so many other currencies that don't have $10 as the pip value. So because okay, there is a table, there is a website. I used to check that. I don't want to take you through the rigors of how they came about all those calculations and all those things. So I'm just going to take you to the website. Where you can get that list. Okay, like this example. Okay, let's look at this example quickly. Euro US dollar increases from year to year. How many pips difference? Okay, I've already explained all this. I've explained all this also. Okay, pip value, talked about that. Profit and loss calculation, that's what I just talked about now. Lot size multiplied by take profit, that's the profit you make, multiplied by pip value, that's profit. Loss, lot size, that's the size of your trade, multiplied by loss, the stop loss, like the loss that you make, multiplied by 1 pip value, the pip value of that currency pair. Okay, so this is an example. This person bought 0.1 lot of euro US dollar, and his profit is targeting 120 pips profit and is limiting his risk at 50 pips loss. What he's trying to do here is that if he loses 50 pips, he's going to close that trade. And if he gains 120 pips, he will be satisfied and close the trade. Okay, that's what it means. So the profit is not going to be calculated as thus the lot size multiplied by the pip number of pips it made multiplied by the value. Okay, one pip value, just like what I've explained. Okay, the same thing here. And so okay, that's not. Now let me take us to the website. matav.net. This is the link already. So I might just send the link to everybody so that in case you want to check it out. Let me send the link to the group. Larry said does not want to lose. Don't worry. Or we'll get to that. We'll get to that part where we're going to talk about losses and profit and all that. Okay, so I've dropped the link for you guys. And so this is the PIP value here. And this is the PIP value in dollar. If your account is in dollar and if your account is in euro, this is the PIP value. And our accounts are going to be in dollar. So that's the value of one PIP for each of them. And the one thing you are going to notice is that the currency pairs that have the same counter currency or quote currency, okay, they will have the same PIP value. We already talked about what counter currency is or quote currency. We said counter currency or quote currency is the second currency in a currency pair. This one is a counter currency, this card here, or quote. This is a quote currency card, this is a quote currency, this is a quote currency. Now, those currency pairs that have the same quote currency, they will have the same PIP value. Now look at Australian dollar, Canadian dollar now. The PIP value is 7.81. Now let's look for other currency pairs that end with CAD. You will see that it's going to be 7.81. So you can see this one here, 7.81. You can see this one also, 7.81. And this one also 7.81. So if you are looking for the PIP value of a currency pair, if it's fine, instead of it to be looking for it ever, just look for any one that has the same counter currency with it. Okay, anyone that has the same counter currency with it. So that's it. For example, if I'm looking for CHF JPY, instead of me to start looking for, if I can't find it on the top, I can just use this one. They will be the same thing, 7.84. See this one too, 7.84 JPY, and CHF JPY 7.84. So that is where you get the PIP value, okay, of this of any currency pair you want to trade, in case you want to do those calculations. That's how the market does all those calculations. Okay, so that's it. Let's move on to how we can size up our trade. How do we size up our trade? Okay, because trading is all about managing your risk. You need to learn how to manage your risk. If you fund, for example, if you fund $500, for example, before you start trading, you need to ask yourself, how much of my capital do I want to be risking on every trade? How much of my capital do I want to be risking on every trade? You need to ask yourself, is it $5? That's going to be like 1%, right? Is it $10? That's going to be like 20%. Sorry, 2%, right? Or you can just say, I want to be risking 3% of my account, which is going to be like $15. So it's not all of your money or a huge part of your money that you're going to use on one trade. You're going to get many trades. So you have to know how to manage your money and grow it gradually. Okay, because that is what professional traders do. Okay, now for you to be able to know what lot size you should use so that you only be risking a certain amount of your money. I know it's what all of us want to know. Many of us want to know that if I want to place a trade, how will I calculate how much of my money I'm going to risk on that trade. Okay, how do I know that? So it's very important. Personally, I do it every time. I always want to risk a certain percentage of my money on a trade. So that's what we call position size calculator. Position size calculator. Okay, so let me take you to a position size calculator. So I think I already bookmark it here, the one that I love using. There are many of them there. So I'm going to send you the link again, position size calculator, or you can get the app. I have the app on my phone too. So let me drop the link for you guys. So that's the position size calculator. And so this is how it looks like. This simple thing here. So it will ask you what currency pair do you want to trade. Let's say it is EURNZD. And it will ask you, your account is in US dollar, right? So you put it as US dollar. It will ask you what your account size is. Let's say my account size is $500. That's my balance. Okay, that's the size of the whole of my account. You now ask me what percentage of my account do I want to risk? Is it 1%? Is it 2? Is it 3? Is it 4? Is it 5? All right. So that's or I might just swap with money. I might just want to type the money. I don't want to do whatever calculation. I mean, I don't, let's say you don't know what percentage means, like percentage, whatever. Just put the money there. So let's say if it is $20 I want to risk, if it is $50 I want to risk, if it is $7 I want to risk, type it there. But make sure that it is, this one is money, USD. Because if it is the risk, let's say that, and you put 12 there, it's going to do 12% for you, not $12. So you have to make sure you see what is here. So this one is 12% now, it's not $12. If I swap with money, then I can type $12. I hope we get that. So let's say I want to risk just I like my own in percent anyways. So let's say I want to risk 3% of my account, for example, on that trade. Now ask me what is the stop loss. Now we're going to talk about stop loss now. Now stop loss is asking me on that trade, what is the maximum that I want to lose? Okay, or if the price goes against me, I'm trying to say, okay, I'm okay, take me out. Okay, because sincerely, it's not every trade you're going to win. There is nobody that's going to win all of his trade. It's not possible that you're going to win all of your trade. There are some trades you're going to lose, but you have the power to say, this is once price, if price is going against me, and if it has gone against me by this much, just take me out of the market. That's the meaning of stop loss. Just take me out of this market. Okay, I accept I'm wrong. I'm going to look for another opportunity. That's what it means. So if your own stop loss is, let's say 25 pips, let's say my stop loss for this trade is, let's say 50 pips. Okay. And this one, just leave it as 1. This is the current value of New Zealand, US dollar. Okay. It's Euro New Zealand 1 So you just click on calculate. And this is what you have, 0.05. So that means that is what you are going to use to place that trade. So that means if you use 0.05 lot on that trade and you lose 50 pips, you are only going to lose 3% of your money, which is $15. That's what it means. Okay. So in this business, we always try to look at the risk aspect of it. Okay. It's not just about thinking of the money you are going to make and all that. You also need to think about how well or how much you are going to protect your capital. Okay, very important. You need to also devise a way to protect your capital. So that's what we use position size calculator for. So I can now pick 0.05 and then go here, my Euro New Zealand dollar, and then I put it here, or I just right click and put chart window. It's still the same thing. And then let's say this is where I now want to buy. And I'm setting my stop loss at 60 pips. Okay. So if I'm setting my stop loss at 60 pips, the current price I'm entering is 1.65598, for example. And so I'm risking 6. I mean, if price goes against me, so I will just remove 50 pips from here. So that is where I am going to set my stop loss. We're still going to talk about that 65098. Just say around here. Okay, let me go to the lower time frame. Okay, let's say I want to buy here and I'm seeing that if price gets here, just take me out. Okay, that's what it means. All right, so I will now go here, new trade. I'll put paste the one I copied from the calculator, and then my stop loss is going to be, I type it there, 1.65081, and I click on buy. And so you can see I'm buying here now. This is my buy price, 0.05, and this is SL, stop loss. What this is trying to say is that because I'm buying, I'm anticipating that price is going to go up. If it goes up, I'm going to be making money. But in case I am wrong and it goes against me, if I don't set a stop loss there and I just allow it to go, I can lose all of my money. So I have to put a gauge, okay, to how much I'm willing to risk on the trade. So this is the one is like you are telling the market this is our maximum want to risk. In case it doesn't go again, in case it goes against you and you are not around and you can't close the trade manually, once the price gets here, it's just take you out. And so when you check, it's going to be at roughly around 15 pips or so. You can see it's around 16. Okay, I didn't really measure it very well. So you can see how the calculator helps us to do that. That's around 15, 16 pips. So if this price now goes against me and it gets here, I'm going to lose like 15, 16 pips. I can also set my take profit. Let's say I want my take profit to be like 100 pips. Okay, from here, this is my entry price. I can drag 100 pips up. 100 pips up, that's going to be 1.6658. So I come here, I put this 1.6658, 1.6658. So that's going to be where I want my take profit to be. Oops. So I already had determined ahead of time that this is where I want. If price comes here, it should give me the profit there. I only want to make 100 pips, because if you are not there and price is going up, price is always going up and down, okay, many times. And the price goes up and you're not there, you have not closed, it's still floating. Maybe it's when you are sleepy, it will now come back again. So, but you can always set it ahead of time that in case I'm not around, whether you are online or you're not online, or your system is faulty or whatever that happens, once price gets here, this is a server. Okay, once you have placed an order here, it stays there. Whether you log out of your system or your whatever, the order is ongoing in the market. So when price gets here, it's going to take me out and book profit for me there. Okay, so I've not set it actually. So let me set it. So I can just right click here now and click on modify. And then I can now type, I already have my stop loss set. I can now type my take profit to be 1.66589. And then I click modify. So you see it here. Okay, can you see that now? So I'm buying here, I'm setting my stop loss here, and I'm booking my profit here. That's what it means. Okay. Now, the other case, reverse is the case when you are selling. When you are selling, your stop loss is going to be above. Okay, let's say I'm selling here. I'm selling here. All right, my stop loss is going to be above, because it is in that direction that I'm going to be wrong. Okay, while my take profit is going to be below, because it is in that direction I'm going to be right. If you are selling and price is going lower, you'll be making money. If it's going higher than your entry, you'll be losing money. That's what it means. Okay. So let's look at this case now. Let's say I want to sell here. My stop loss is here and my take profit is here. Okay. So how will I now be able to, let's say there's a certain amount of money I want to risk. So this is the calculator. All right. So what we need to know now is the number of pips between these two levels. Okay. Okay, I can close this one. Don't need it anymore. Okay, so for me to calculate how much I want to risk, I don't need the take profit. I only need the stop loss. So let's see the number of, let's see what the stop loss is like. From here to here is 61 pips. All right, 61 pips, euro, US dollar. And so I can now come here and say, okay, I want to trade euro, US dollar. And my account is 500. Let's say I say I want to risk 3% also. And my stop loss is 61 pips. And then I calculate. And so this 0.02 I'm going to use. So that means whatever that happens with this parameter I'm using, whatever that happens, I won't lose more than 3%. That's I will lose just 3% of my account. Okay. And if I say, okay, let me place the order first. So new order, euro, US dollar, I want to sell, let me put it 0.02 according to the calculator that I said the stop loss, 1.06577. Set the take profit, 1.04841. And I click what? Sell. I can't click buy, it won't go. Okay, because the parameter is wrong. So sell. So that's it. Now the green is showing sell. This one is showing stop loss. And this one is showing take profit. So if price gets here, it's going to take me out at a loss of 11, 12 pips. Okay. And if it comes to take profit, it's going to give me a profit of around $22. Okay. $22. This one is around $12. Okay. So I'm risking $12 to make $22, $23. Okay. That's what it means. Meanwhile, that doesn't mean that you can't close the trade anytime you want to close it. I might decide currently the trade is around where is it? Euro US dollar, like 74 cents, because that's not really moved. 74 cents. I can still decide to close it here, or even close it here. Right click and click close. I can decide to close. Because I set all this does not mean that I can't change anything until price get to those places. No. All right. Doesn't mean that I can still close the trade anywhere. But the reason I'm setting this is that in case the market moves so fast and I can't quickly come here to quickly come and close it and all that, or maybe I want to sleep, or maybe I'm not around. Okay. I don't have to start looking at, sit down in front of my system and continue to look what the market is doing and all that. Okay. I don't need to do that. I still have other life I have to live. Let's say you are working or you want to do something, you can do it. You've already said this. So you know that the best case scenario is $22 profit and the worst case scenario is $12 loss. So that's how you measure your risk. So you can see that it's not really that risky. Trading is not really that risky because, everything has been placed in your hand. It's your money. You can always decide how you want to go about it. Okay. So remember, we have not looked at analysis, because when we look at analysis is what is going to give us when to buy, when to sell, what to buy, what to sell, where to buy, where to sell. Okay. Where to put our stop loss, everything. Analysis is what is going to tell us all that. This one we're just trying to give you, show you how to place trade and all those things. Okay. Yeah. So you want to close the trade, you can come here, close the trade. Close this one, I close this one. So that's how the close is closed. Okay. So all the margin will be freed. All right. So so that's it, guys. So that's how to place orders and how to set stop loss and take profit and all those things. Okay. Meanwhile, there are two major categories of market orders. Of trading orders. there is what we call market order or instant order. Or instant. Market order or instant order is when you want to buy or sell at the current market price. Okay, when you want to trade at the current market price, what you are going to choose is the market or instant order. But let's say you don't want to buy or sell at the current price, but at a different price. And you don't have to wait till price get to that level before you trade. What you are going to choose is what we call pending order. All the trading orders, all the trading order examples that we have shared with you so far on Euro New Zealand and Euro US dollar, they are all market orders or instant orders because we open those trade at the current market price. Okay. But if you don't want to do pending order, you just come here, new order, set what you want to trade, make sure it's this, put the volume, and then come here, type. You can see market execution. You can choose pending order. Now, we now have 4 types of pending orders. 4 types of pending orders. That's what I'm going to explain to you now. Now, this usually gets confusing to some people because of the way the definitions are so related. Okay, but don't worry, you're going to get used to it. All right. So we have 4 pending orders. Number 1, we have what we call buy stop order. This is when you want to buy at the price that is greater than the current market price. Now, this is the current market price, but you want to buy at a higher price than the current market price. There are some strategies that you're going to use that you want to buy at a price that is higher. Okay, maybe when prices get to that place, that's when everything is going to get clear. Okay, you don't want to enter around the current price because maybe you feel things are not clear. There are some strategies like that. And so you need to buy at a price that is higher. Okay, so that means you have to wait for price to get there. But instead of do that, you can just set a pending order, which is a buy stop order. Okay, you can set a buy stop order. And once price get to that level, it's going to get you in. So let's look at a buy stop order. Let's say we want to set a buy stop at this place at 1.06383. That means if price gets here, we'll be in for a buying position. And then where do you going to set your stop loss? It's going to be below here. Let's say your stop loss, you want to set it here. All right. Or let's say, okay, you're going to set it here. And let's say you take profit, you want to set it here. So this is where you want to buy. So if price gets triggered, you want to take profit here. You want to manage, you want to cut down your risk here. That's what it means. So you go to new order. Let's say you've done your risk, you've used your risk, a position size calculator to know what the volume of trade you want to take, okay, based on your risk. Let's say 0.02. So you go to pending order, it's already there. Then you choose buy stop. If you are buying at a price that is higher than the current market price, okay, then you put your all of these things. Stop loss is going to be 1.05608, and take profit is going to be 1.07431. You click okay, at what price? Sorry, to ask you buy stop at what price. You put 1.06383. That's what you're even supposed to put first. The buy price, then you put this other ones, then you could place. So let me remove those lines. Can you see that? This is where you are. The buying price is green. Meanwhile, you can see that the trade has not been activated. Nothing is showing here. Why? Because the trade has not been placed yet. It's a conditional order. When price gets here, I want to buy. So you don't have to do it manually. Once price just gets here, it's going to buy for you. Okay. If price even comes here without touching this place, it's not going to hit any stop loss. Why? Because before the stop loss and the take profit, before they get active, price has to fill the order first. If the order is not filled, this one and this one, they are useless. Okay, especially this one, because there's no way price will get here without filling this one first to pass here. Okay, so this is a buy stop order, take profit, and this is stop loss. Okay, so that is it. Now, what about if you want to, okay, that's buy stop, take note of that. Now, another one is, what about if you want to now buy at a lower price? Okay, you want price to come low. Let me close this one. You can delete this one. Just right click and delete, or you just come here and click delete here. Okay, it's not a trade, so I've deleted it. It's no more active. So what about if I don't want to buy at a higher price, but I want to buy at a lower price? What order am I going to set? Okay, I want the price to go down. I want to buy at a disc, like a kind of buying at a discount, so to speak. Let's say I want price to come here before I buy. I still believe it's going to go up, but I want to buy at a lower price. So if I'm buying here, then my take profit is going to be here. Let's say I'm setting my take profit here, and my stop loss is going to be, let's say, here. For example, these ones are just examples that I'm choosing at random. What kind of order are we going to choose? That is called a buy limit. Buy limit. That means you want to buy at price that is less than the current market price. Okay, that's what we call buy limit, L-I-M-I-T. Okay, so let's place the order, new order, and you choose pending order. Make sure these are the parameters, the volume, then buy limit at what price? 1.05505, and then your stop loss is 1.05085, and then your take profit is 1.0697. Click placed, and so that's it. So if price comes here, I'm going to buy, and this is my stop loss and take profit. I can delete it. So let's look at the sell side of it. So what about if I want to sell at a higher price? Let's say I want price to come up here, and then I will now sell instead of buy. Okay, I want to sell at a higher price. So let's say I want to sell here, and then I want to take profit here. I'm not going to give an example in this case. I'll just give us the name. Okay, the name for this one is what we call sell limit. So this one is sell limit, not this one is sell limit. That means we want to sell at a price that is lower than current market price. So I want to sell. Okay, sorry. The example I gave is I want to sell at a price that is higher. Okay, so that is sell limit. When you sell at a price that is higher than the current market price, that's sell limit. Okay, why sell stop is when you want to sell at a price that is less than the current market price. Okay, that's what you're going to set. So those are the 4 pending orders that we have. Okay, you just come here, new order, choose the volume, go to pending, and choose sell limit, and then put your parameters, and that's it. Okay, so those are the types of orders that we have. The 4 pending orders and 2 instant orders, sell or buy. So that's it, guys. Okay, and that is where we're going to stop for today. And with that, we have covered a lot. So what next we're going to do is do some tutorials, or some we're going to have a class on the MetaTrader 4 proper and talk about these tools. And then we're also going to look at the GWX Exchange web platform, which is a very, very sophisticated tool. And then we're also going to look at maybe check another trading platform. So Monday is going to be for trading platform and introduction to market analysis and then we just take it gradually from there. Okay, so that's where today's class is going to end. Thank you very much. Let me know if you have any questions. So somebody says, please do resend the links to those sites. Okay, this is the position size calculator. Let me send the link. Okay, so let me end this this call, this class.